Dan, I guess this proves, first of all, good morning to you, but it proves the vulnerability of a lot of these tech valuations. This is what certain CEOs that are not in the sector have been warning us. Does this worry you?
Well, I think that we need to make a big distinction between the utility applications, which are necessary for us as consumers, and applications like Twitter, which I still think is somewhat faddish. It's one of those services that tomorrow could be replaced by something that's better or more convenient. We've seen this before with things like Flickr and then Instagram and Snapchat. We've seen it with messaging apps, and we've even seen it with MySpace being replaced by Facebook. And I think that, even now we're seeing with Facebook there's been some changes to the way in which consumers are engaging with that as the demographic moves to an older demographic, and the younger consumer is now moving away from Facebook to other social engagement platforms. So we have to be conscious of that, and when we're conscious of that, then we can recognise its utility as a platform going forward.
Dan, is it simply the fact, though, that Twitter has yet to fully get right its advertising strategy? I look through the Facebook numbers, and they are startling in the ability to leverage advertising as a huge revenue-generating story. Maybe Twitter's 6 months further down the road or 12 months further down the road from Facebook, but once they start to be able to get the advertising story right, doesn't this company start to generate decent top line?
Yes, I think it does. I mean, it's got a fantastic leverage across its user base, which is huge. And, as you know, we have a mobile engagement platform that leverages social media like Twitter, so allowing people who tweet to turn that into an instant transaction. By changing that environment and reaching those consumers, you suddenly, raise the utility of Twitter to both brands, consumers, alike. So I think, it has enormous potential because of its reach, and now it's about monetising that reach. And I think it's maybe a bit early for that company to be listed, because it's going to be measured quarterly when it's still in a sort of growth and development phase.
Dan, you were mentioning a little bit earlier on that the danger with Twitter is that it could be replaced by something else at any moment. Is there something else that you see it replacing? Is there a new platform that you're looking at that you think will take over our lives?
No, I don't think so in the case of Twitter. I've got nothing that I can refer to, today. But the point I was making was that, essentially it's just it's a style-driven and faddish-driven engagement environment, which can be replaced by something that could do the job better or more efficiently or more elegantly, and we don't know that yet until it appears. Consumers are very quick to drop these things and move on to the next thing, because they don't, the engagement, the commitment to it is low. At the moment, it's the one, and it certainly has the potential to maintain its position. But all I'm pointing out is that, it's vulnerable in that it is easily replaced. And I think we've seen that before. We've seen it with other examples. WhatsApp, for example, as a messaging platform, being a very good example of how people move from text messaging to WhatsApp in a heartbeat.
Dan, keep it right there, because we're also joined by Eileen Burbidge, partner at Passion Capital, with more. Eileen, when you talk about Twitter, actually, when you look at the figures, as you were mentioning in your note, revenue grew 74% in the quarter. Advertising dollars almost doubled from a year ago. Yeah. Is it just that they disappointed analysts?
I think it is. I think it's an issue of misset expectations, because if you look at the numbers just absolute-wise, it's $500 million a quarter that they're making. Yeah. That's not so bad. And actually, I might sort of argue that it was appropriate for them to go public. I think that's healthy revenue. I think it's healthy revenue growth. The big question is, when can they get to profitability? But they wouldn't be the only listed company that has that issue, right?
When I look at the Facebook numbers, they were amazing, and they've really started to crack the advertising story, particularly this sort of direct story straight to the advertisers. What does Twitter have to do? What's the gap between what Facebook is doing right now and Twitter? Because once you start cracking that, you can start monetizing this stuff and you can start making money.
Yeah, no, I agree, but I think the key will be time. I mean, Facebook went public, years ago, right? And Twitter's still just trying to work it out. So I think what you'll need to see is the same amount of time that Facebook used to realize how they were going to really turn the crank. And then Twitter's going to have to do the same thing. What they're testing now with promoted tweets and the other formats and making acquisitions here and there, I think time's going to tell. They do testing on everybody. They know exactly what you click on, what you don't click on, what you hovered, and what you didn't choose to engage with, right? They will refine it until they get it right.
So, Eileen, you think, given all of this, that actually the CEO's job is not at risk? I mean, we had a fun question of the day: is what would he be tweeting today?
Yeah.
What should Dick Costello be tweeting?
I think the unnerving thing for any publicly listed company and its chief exec is that they're always at risk. Their head is always being called for by somebody and by some unhappy shareholder. But I think Dick Costello is doing a very, very good job. Again, I think the growth year on year, is really astronomical, and it's because it's being compared to a Facebook, maybe even unfairly to an Apple, just in terms of what's happening in the tech sector by the leaders, generally speaking, that people are sort of like, come on, let's see more. But actually, I think he's navigating the course really well.
Dan, how much would you give marks out of 10 for Dick Costello thus far?
Oh, I'd give him 10 out of 10. I think he's doing a fantastic job. He's driving the business forward, and the revenues speak for themselves. It's obvious that the impact to the share price is purely down to expectations not being met. But again, as I mentioned before, this is a company in its growth phase. It's in its early stages of development as a company. It's being valued on a quarterly basis. Very difficult with the business going through its evaluation, its growth, its metamorphosis. So it's early days for the company. It has tremendous potential. It's also vulnerable, as I said before, but I think that's part of the attraction of something that has such a potential upside to investors.
Eileen, does Dick Costello have to deliver in the next 6 months, or does he have longer? I know you're saying, when you're at the top of a company, you always get some flack from somewhere.
Yeah.
But is his window now a little bit more narrow than it was 2 days ago?
I guess some people might say so, but I'm kind of on the same side of the coin as Dan is. I think that Dick should have more time to stay the course. I think he's doing a very fine job. I don't know that anyone could do it better. So I think shareholders should give him the confidence to do that.
All right, Eileen, thank you so much. Eileen Burbidge, their partner at Passion Capital, and Dan Wagner, Power Technologies CEO.